Hi traders, welcome to Monetize. Today's topic very special for the crypto lovers. Now, since you all know, the market has been in downturn for a couple of weeks, not couple of weeks, instead couple of months, and most of the retail investors or traders are shying away from the market. Importantly, if you note, this is the time to get into the market. Why? Because this is the main difference between the retail investor and the psychology of a retail investor and a institutional investor. What happens whenever the market starts going up? The retail investor starts chasing the market, and usually they enter into market at a very high price because of FOMO or greed. So two sentiments which prevail in the market, which basically dominate the psychology of a trader or an investor, is fear and greed factor. So due to greed, the retail buyers or investors, they start buying at a very high price. Whereas the institutional buyer, they get out when the market reaches a very high price. And this is what has happened. So when the Bitcoin market, it crossed 60,000 level, many of the retail investors or traders, they started buying because they were anticipating much higher levels like 100,000, 80,000, or whatever. But it didn't happen. On the other hand, the institutional players, the big buyers, the big holders, or the big banks or big institutions, the corporates, they started selling around 60,000. And now, when the market is down, the retail investor is fearful. He does not want to take a chance because he's not confident. So, this is the time when the big players, the institutional buyers, they will start coming and take opportunity to buy at a lower price and hold it for a longer term. So if you get in around 30,000, 35,000, or 40,000, you cannot exactly pinpoint the bottom or top in the market. This is a very, you can say, a big mistake by the retail investor or a retail trader. He is waiting for the exact bottom or the exact top, which is almost impossible to predict. So, this is the good time to start buying into the crypto market, the various crypto coins or the currencies for a mid to longer term. But if you are looking for short term trading opportunities, the intraday kind or the intra week types, then definitely only sentiment analysis is not good enough. Then you need to know the technical levels as well. Now I'm going to share my screen with you. And on this screen, we have Bitcoin sentiment meter. Basically, the market sentiment is divided into two categories. Number one is fear, and number two is greed. Whenever the market is into a bullish mode, people have greed and they start chasing it. That is the condition when they have a fear of missing out. It's called fear. The term starts with fear, but actually it's a greed factor. They have a fear of missing out and they start chasing the market. So usually a retail investor, due to FOMO, they start buying at a very high price. Whereas on the other hand, the institutional investor, they start cashing out. And what happens when the market turns around? It turns bearish and the retail investor gets into fear mode. He is fearful to get into the market, but the smart investor, the institutional investor, they start buying at the dip. So this is the current value of Bitcoin sentiment meter. It's around 20 and it's into fearful territory. If the value is greater than 50, then it starts getting into greedy territory. The greed factor comes in. And when the value is less than 50, then the fear factor comes in. In between, it's the neutral situation around this zone, the yellow one. Now, what happens? What we have seen when the market was around 60,000, 68,000, the retail investors were chasing and they were buying, whereas the smart investor was cashing out. And we got a clear indication on the chart that the market is about to turn into a bearish one, and it happened. So now this is not the time to run away. This is the time to start preparing for the next bull run. Okay, So what we will need some validation on the charts. We will get some bullish indications and we will start buying the dips. Nobody can exactly tell or pinpoint the bottom or the top in the markets, but we should start preparing ourselves when the market is at a discounted price. I'm just switching my screen again and I want to show you one more chart which will support my theory. This is the second chart. This chart says test data when used with Bitcoin. The top line is the bullish territory when the market, the retail investor or trader was into greed mode. The bottom line, the red one, is the fearful territory when the retail investor gets into fear mode. So what happens whenever the retail investor they come into this territory, the bottom around the green line. Okay, so we have seen it multiple times. There is a time, this is the time to get in because after that we see huge bullish moves. So this is the time to start preparing for the next bull run. So where is the current situation? Here we are again at the bottom. So what is coming up? The next thing is we should see a bull run in the crypto market. So this is the theory and this was the concept which I wanted to discuss with you, which I wanted to present it to you. I hope you found this video interesting and instead of shying away from the crypto market, you should start planning your next move. I'm not saying that you should buy big lots at once right now. In fact, you should start planning and buy in a staggered manner. You should do it in small tranches. As per the confirmations on the chart, you can buy on the dips in small lots. So guys, stay tuned and if you are new to my channel, subscribe so that you will be updated with more such interesting videos. Thank you.